I want to start off today by talking about what's the market update for the Seattle area, just generally. You know, what August looked like and what should people know about what just happened and what to expect for the next few months.
We sat down and we dug through the Tri-County area, the Tri-County, Pierce County, King County, Snohomish County. So the Seattle Metro is really big when people think about it. Simple, short, quick version. Prices have been appreciating since February when they bottomed. Inventory is very, very low. We are in a seller's market. However, it's not behaving like a hardcore seller's market. There are still buyers getting some deals, getting some closing costs, getting things like that. But the inventory numbers say seller's market. The transaction count is still down. So we're still down about between 22% to 30%, depending on which city you're looking in. So a third in transactions. So we're still in what I would call a transaction recession right now. And the high interest rates is preventing this move up seller, move up buyer from selling their home and getting into a new one. That's one of the things that's keeping inventory really low. Massive opportunity on the builder side. I'm going to go flip a home. I'm going to install a manufactured home. I'm going to go build a little home, or I'm going to come in and add an ADU to something. Massive, massive opportunity because that supply shows no signs of increasing right now. So throughout the Seattle Metro, be looking to be doing those things, and I think the ADU is going to be the flip's going to be the fastest. The second fastest is going to be the ADU.
ADU being the additional dwelling unit.
Accessory dwelling unit, additional dwelling unit. They sometimes call them a DADU, a detached dwelling unit. Those are just quick to permit though. Things that can get inventory to market that are in that affordable price range. So parts of the luxury market are still beat up. Now, of course, like downtown Seattle and then over in the east side, Kirkland, more expensive areas, waterfront homes, that's not beat up. But if we get out of those kind of high rent areas, expensive areas, the upper end is struggling a little bit. It's the median price and maybe 25-30% above that is doing great, and below that is on fire and you're seeing bidding wars again. Of course, we can go into the stats in tons of detail if you want to drill down at any specific level, but there's the market in 30 seconds.
And they should text that number, right, to get the stats?
Text the number and you can get a copy of the stats, or let us know what city you're interested in and we'll figure them out for your area.
Awesome. Okay, on that note though, real quick, what should buyers know? What should sellers know? What should investors know after that market update? Great
question. Buyers should know that interest rates are going to stay higher for longer. So you need to figure out ways to get buy down, to get some closing costs, or to be able to stomach or afford a higher payment for the next 2 to 3 years. Sellers should know that there's no indication that the market is going to massively change right now. So you need to look at your time horizons. Do I need to move now? Do I need to move later? Yes, all of the appreciation has most likely already happened. So generally speaking, a market, and the Seattle Metro is no different, finishes its appreciation cycle by the end of June, aka the first half of the year. So the rest of the year should be kind of calm. And so you need to be asking yourself, well, do I want to wait till an election year to sell? And take my chances, because election years can monkey with real estate? Or should I go today with a known quantity? Investors, you got to figure out how to make cash flow. I'm sorry, rates are high. They suck. They're killing our cash flow. So you've got to hunt down better deals. You've got to negotiate stronger. You've got to be more patient. You need to hunt off the market. You have to come in with more cash down. You need to make offers on things that feel disrespectful, that feel low, but not something that's been on the market a week or two. You need to justify the numbers and make sure you are getting some cash flow, because a lot of what you're going to see inside the market with 7% interest rates is going to put you in a negative cash flow situation. Don't buy that. Get a better deal.